Hey everybody, it's Larry Berman here. Late Friday afternoon, as we often do these recordings. Um, what a couple of weeks we've had between some positive economic data, which bad news is good news, and good news is good news, and we've had some of that. But this week the Sam Bankman-Fried FTX fiasco in the last couple of weeks, and what we've learned this week about the fraud is just it's just mind-numbing. There's an article you must do a Google search and read from my friend Ben Hunt at Epsilon Theory. Ben put out this great piece this week, and again, highly recommend everyone has a read of this story. Ben's just a brilliant writer, and he's put out this free link. And normally it's a paid-for service, but I think everybody can have a couple free articles a month. So do a Google search here if you can see the link there. But Epsilon Theory, you should find the story. Anyways, let's get into the charts this week and see what I see. So on Friday, the weekly leading indicators came out, and from the conference board. Sorry, monthly, not weekly. And when you look back at the history of this, forecast of recession when leading indicators, turn negative, weakening economy as it's falling. And we've highlighted here all the US recessions going back 60 years. And you can see that with virtual certainty, when the indicator drops meaningfully below zero, recession is imminent. And so, we're there. The evidence is clear. Never in the history of the planet has the Fed been persistently and aggressively raising rates where most of the economic indicators have turned down, or leading indicators, and the lagging one being, jobs and employment. And the next couple months, 6 months, will be very interesting from that perspective. And, the markets just aren't priced for it right now. The markets are priced for a pause and excitement. And I think we'll get anything but in 2023. So let's get back to the SBF. This guy's going to go down with Bernie Ebbers, Charles Ponzi, and anyone else. But what's key here is how these major institutions like Ontario Teachers Pension Fund, Sequoia Capital, that injected, in some cases, 100 million plus into his Ponzi fraud scheme, that they got duped. And I think what it means, and Ben points this out in his article, that the institutional money that was supposed to come into crypto is not going to come. And so when we look at charts and we see a chart that looks like this, the shaded white area up here, we call this overhead supply. Anybody who bought Bitcoin basically in the last 2 years is underwater. And every possibly rally that we see is almost certainly going to have that get me out, I want my back. All those hodlers are going to turn into shit. I just got to get my money out. And this is going to be interesting how it plays out here. Now, of course, I could be wrong. But I look at, so Bloomberg has this crypto monitor thing, and let me just pull that up here. So Bloomberg's got this cryptocurrency monitor here that I look at from time to time, and and kind of see the value of these things. And so, Dogecoin, I remember a year ago or 2 years ago, Elon Musk was all over this. So I kind of clicked into it and looked at all the trading and did a chart of this thing. And I put it on a 5-year, and then I changed the scale to log. So this is where I think around where Elon Musk tweeted, oddly enough, about his support for this stuff, and where Tesla was going to start accepting Dogecoin as, to buy cars, and it's so painfully mind-numbing, what happened here, the meme craze and everything else that was always very, very clear to a rational thinker what it was. Anyways, looking at it on a log scale, this thing that was created as a joke and traded as a joke for a long time got some supporters. So the supporter for SBF FTX, I love Tom Brady. I loved him as a player. I may burn my Tom Brady shirt. The pump, the celebratory endorsement, just, wow. I'm blown away. Not because it hasn't happened before, because it's happened a lot. There's always a fraud going on somewhere, and they're very hard to detect. And so, what is all this stuff worth, folks? Absolutely nothing. It's worth what the next person will pay for it. And you've got now years of overhead supply. And I think you've got institutions saying, boys, I think and gals, we've made a big error. There's one thing to like new technology and innovation and disruption. All those things are wonderful. But you just got to recognize value. and when there's no value, understand that you're speculating. If I leave a legacy, at all, I think it's hopefully going to be in rational, conversation with people. Anyways, bull and bear pick of the week. Gonna love this one, folks. So I'm gonna get a lot of haters here too. Listen, to be fully clear, good company, good stock. So there's this aura of speculation around Elon Musk and Twitter and you've got, again, 2 years of overhead supply sitting here. Now, this isn't Bitcoin. This isn't Dogecoin. This is a real company that has a real product that I'm actually trying to buy one right now, if I can find it at a reasonable price. And I think the future is EV cars. So I love it. But I think this stock right now is worth about half or so of what it trades for today. If you're a value investor, if you like a long-term story, where would you buy it? And so I today put a position on Tesla out to March, where I bought 100 puts and I sold twice as many 80 puts. And if it gets into that zone, I'm more comfortable buying the stock now. But we've got 2 years of overhead supply here, and it's going to be very challenging for anything related to Elon Musk for a little while here to go. But the stock's trading in a pretty crazy multiple, and so, anyways, that's my bear pick of the week. And I want to buy it, good company, but where do you buy it? And that's how I'm playing it for the next few months. And boy, I hope I get filled both on the car at a wholesale price and on the stock at a much better valuation. So from the value lens, I saw a headline cross my tape today. Office is dead. It's never coming back. Actually, this week we had, so many people in the office. We were taking corporate pictures. There were a bunch of meetings going on. It was just great to see everybody, actually. And in fact, I got to say, there was a dozen people in the office that I've never met before that we've hired over the last few years of COVID and restrictions and everything else. So it was really, really nice to be in the office. But Coronado is New York primarily based office REIT. And you look at where it's trading, great financial crisis, below the COVID lows, back to levels not seen since, the 1990s. And you got to start thinking there's some value here. But I don't know, is New York real estate worth anything anymore? Absolutely is. So, it'll be interesting to see how it plays out. But, for those looking for some value, that's my bull pick of the week. Now, I should blow this up a little bit and say, okay, let's accumulate. Let's just not buy it all here into further weakness, because likely there's another dip to come here. But if these lows hold around 20, it looks very attractive from a valuation standpoint. Anyways, have a great week, everybody.